I've been trading for 5 years right now, and every time I've blown an account, it's because of one of these 7 reasons that I'm going to be sharing with you. And if you are blowing and you are doing none of these, then I think you need to pray or ask your ancestors, because there's certainly something wrong, or maybe there is another reason that is not that I'm not going to mention, and you can comment in the comment section down below if there is any other reason, right? So first off, it's always finding an opportunity 24/7. Whenever I stare at the charts, and I'm always looking for an opportunity, and I always find opportunities. At the end of the day, that day I usually end up blowing, right? So let's say, for example, right, I'm today I just funded my account, right, and I just start looking for opportunities to enter for setups, and I keep finding setups. Whenever you find yourself always finding setups in the market, then you should ask yourself, are you winning? At the end of the day, you should look back and see, whenever you, especially when you just funded your account, you're always looking for opportunities, and you're always getting opportunities, right? So always, yeah, of course, you might make money on some of the trades, but eventually you might end up blowing, because you're always looking for opportunities. If you're always in the market, let's say you take 20 trades in a single day, obviously you're not going to win all those trades. And especially if your risk reward ratio is messed up, you're obviously going to blow that account, because you have traded out of 20, you might lose 8 or 10, right? On average, we're just using 50-50, right? On average, you might lose 10. And if your risk value is not that great, of course, you might end up blowing an account, right? So don't always look for opportunities. Always only look for opportunities when it's there, when there's that setup. Don't just enter because for the sake of entering, just because you've got money in your account. Look for high quality setups. Have a setup in mind that that you always look for, right? And the second reason is it's almost similar to the first point, right? So the second reason is FOMO, right? So your setup isn't ready yet, but you just want to be in the market, right? So of course, this is a little bit different, because you might not be entering each and every time, but when you've got FOMO, right, you are thinking, this setup might go without me. Even if your confirmation hasn't been met yet, wait for that confirmation. Don't enter, because most of the times you might enter, right, and then after, when the market stops you out, right, your confirmation is made, right, and you are going to enter again, right? So you've now entered two positions, right? First of all was the formal, right? And when the condition has been met, you have entered again, right? It might work out, but if it doesn't work out, and your stop loss is hit again, right? So you've been hit your stop loss 2 times, right? Rather than if you just waited for your setup to be met, right? For your setup to be, so like for your entry criteria to be met, and then you entered, they've only hit your stop loss once, right? So you should always not be affected by FOMO, right? The market is going to give you many pullbacks. Even if you miss that setup, there's going to be a pullback, and you're going to be able to enter again, right? So that's the second thing that you should always avoid: fear of missing out, right? And then as for me, if I lose 2 to 3 setups, right, I know that the fourth is obviously going to lose, right? If I lose 2 setups, the third is, it's more or less, right? I might lose, I might win, right? But usually, if I hit 2 stop losses consecutively in a single day, I'm just going to be avoiding trading that day, right? And just, even if I'm just staring at the charts, even if I get a perfect setup, I'm not going to be entering, because most of the times it's so like revenge trading. If you come to think of it, you might over risk, you might over leverage, you put a large lot size. I don't know what it is, but as for me, especially the fourth trade, especially if I'm losing consecutively, right? It's always better to change, right? So this is also relative. It depends on you, right? For someone it might be 2 trades. For someone it might be 5 trades. It all depends on you and the account size, of course. If your account size allows you to lose 5 times and you're going to keep on to win the next time, I don't know. It depends on you. So this is when you have to study yourself, backtest, analyze, and see how many times. If I lose the first 2 times, the first 3 times, how am I, also like the emotional condition? How do I react? Because most of the times, especially for most people, I know that it's around that range: 2, 3 trades, 4 trades. If you're losing consecutively, avoid trading. Just leave the market, right, and calm down. Go for a walk, run, jog, call someone. I don't even know what you're supposed to do. Watch a movie, anime. I don't even care, right? But usually avoid trading, because most of the times, you imagine if you have lost the fifth trade, right? You're going to revenge trade, think that, oh, maybe I will recover the money that I've lost, right? So just avoid it if possible, right? Then for the fourth thing, right? is increasing your stop loss. It's hoping that the setup will. So like that moment when you've got so much faith in a trade, right? So you so like you're so convinced that I've seen there's an impulsive move, a flag, and the flag is testing 50 moving average. There's a setup that you know that it always usually works, right? And you find that setup, right? And you enter that setup, right? Most of the times you are so like lenient to it, even if it's misbehaving, even if it's already invalidated your setup, you know that usually this setup usually eventually works out, right? Though it might be true, yes, it might work sometimes, but most of the times you are going to lose because you're just going to increase your stop loss saying that, let me just give it a little bit of allowance. Let me give it 15 more minutes. Let me give it an hour and see how it behaves. Most of the times you are going to blow that account because you are hoping, or you are so like you are hoping, you want to control the market. You are hoping what you want happens when the market is its own mind. The market, you can control the market, right? So don't increase the stop loss, right? When you've lost a trade, right? Then for the fifth point, right, it's almost similar, right? But now it's so like increasing the lot size. Let's say you've lost two trades, right? And you want to recover that money. Now this is revenge trading at its best, right? This is just revenge trading, right? And you see a setup, right? It's perfect. It's a perfect setup. It usually works out. And you think, let me just increase the lot size so that I can be able to recover all that money in one trade, or the money that I've lost in one trade, or maybe I might reach my target in one trade. That setup, even if it usually works out all the time, 100% perfect, guaranteed, there is always that day that you're going to what is going not going to work out, and you're going to blow that account. Of course, this might have worked out before, but it's not a guarantee that the market will always do that, right? That day you might just lose that, and since you have over leveraged that account, you're going to end up blowing, right? So it's just as simple as that. You be consistent. If you're just using 50 cents lot size, just use 50 cents lot size. Don't over leverage because this is a perfect setup. Don't give exceptions, right? Any setup is any setup. The market can go both ways. You never know what the market might do. Otherwise, you be a millionaire by now, or a billionaire, right? That's the fifth thing, right? The sixth thing is having a target in mind, right? So when I say a target, especially daily targets, right? Weekly targets, they're a little bit better, or monthly targets, they're a little bit better, but having daily targets, so like having a daily target, I want to reach $50 each and every day, right? So imagine if you don't get setups that day, but in your mind, you're still recording that. You're still thinking, I have to reach $50. I have to reach $50. And obviously you're going to end up entering when the setup, even if there's no setup, that's when you get FOMO. There's no setup, you're still entering, and you are just looking for any opportunity to enter, right? So eventually you are going to end up losing because you are entering even if the market isn't trade, even if there's no setup, even if your criteria for entry hasn't been met yet, but you're just looking for opportunities to enter. Hence you end up losing because you are forcing trades where they are not, where there isn't a trade. You're just forcing a trade, right? So eventually you end up blowing because you're forcing trades, right? To counter this, you should have a system, right? A video that I talked about systems, right? I think it should be how to make profit easily, or when trading or something like that. You can just check it up and you see where I talk about systems, right? So having a system is much better than than setting targets, because it gives you so like room to what, or you don't have, there's no stress, there's no, so you don't have to pressure yourself, in simple terms, right? Then the last thing, right, is this one. I'm a repetitive culprit of this one, right? So this one is ignoring what the market is telling you, right? So this is when, let's say, you see that there's a flag or whatever, your entry criteria has been met, right? You've entered your position, right? Now you know that this setup always works out, usually works out, right? Even if the market is showing signs of reversal, even if you are still in profit, right? You could have exited with profit, but you know that you just have that hope that this setup usually moves. Yes, big moves, right? Even if the market is showing signs of reversal, you just keep on holding that trade, knowing that usually the setup works out, right? Right. The market does what it wants when it wants. The market is like the weather. You can't force the market to do what it doesn't want at that time, right? Even if that usually works out, you don't. If the market is showing signs of reversal, just exit. Even if it does what you wanted to do in the first place, but it's better to be safe than sorry. It's just like, let's say there are clouds, rain clouds, and you know that, and you think that because maybe, let's say, you saw the weather forecast yesterday and it showed that it's going to be sunny, and you just go out without an umbrella. Guys, don't do that, right? Do what the market is showing you, react to what the market is currently doing, right? So that's why we use price action and everything else, so that we react to what the market is currently doing, right? Though I'm also, in fact, most of these things, I'm still a culprit of them, right? But especially this one I know, right? Though I'm still a culprit, but we should better ourselves, we should improve, we should, so like, look for better ways that we can do this, we can what, so that we can avoid blowing or losing in general, right? So yeah, this is it. And remember, you're the bridge between where you are and where you want to be. So do the hard work, especially don't feel like it. And you haven't subscribed yet, then what are you doing? And then I'm coming for you. Because